What is going on, my friends, and welcome back to another video on the channel. In today's video, we are going over Bitcoin and the overall crypto market as we are now at the moment of truth. This is going to possibly be the last step that we needed to take in order for us to really see some type of continuation of growth or possibly a collapse in the price of Bitcoin, which of course will drag down the rest of the market, especially as we do see some of these, geopolitical events kind of causing a bit of tension and a bit of stress on the majority of our markets here. Okay, so in today's video, what we're going to be focusing on is this key level of support in which we talked about just a week ago, saying that this was a very strong possibility of happening, in which it was a very strong possibility, again, of us returning to these levels, needing to establish support on these levels, allowing our indicators to reset before we could see a continuation of growth. So what we are looking at right now, again, is the fact that we did come back down to this key Fibonacci swing low to swing high, 0.618 to 0.786 zone. Now, the reason that this is so important is because at this point, we are still looking okay for this to be the start of the bullish reversal and, the type of continuation back towards the $50,000, $60,000 area. It's still on the table, okay? The reason that I say that is because there are many steps that are needed to be taken in order for a bullish reversal to happen. First and foremost, you need to clear your downward sloping trend line and exit out of your downtrend. Now, the way in which you exit out of your downtrend is you break the trend line, you work your way up, you set a new macro high, and although we didn't get the closes, we did see the higher high get set. And then after you do that, that is the first big confirmation, okay? That's the first big one that says we're starting to see a change in tide. It doesn't necessarily mean that we are immediately going to start to work our way back up, but we are entering into a new phase of the bull market. Now, the next step from that point forward is that if we are going to see this being a now thing, we need to see these indicators reset and a higher low established. The reason that this is so important is because as we see the price breaking out to the upside here, there's a lot of strength that's involved, and there are a lot of things that need to happen in order for us to really be able to see a climb of this nature. As you can see, as we did see that big push, we saw extreme levels of bearish divergence, in which we covered last week on the channel, in which we could see things such as, these lower lows being established, but higher lows on the RSI. That's an extreme case of bearish divergence here on the RSI. And what that tells us is that we were getting overextended. We look at the daily Bollinger Bands. We went from bottom side to top side. This is usually a sign that we are reaching towards a top point in which we may start to pull back and resort back to that moving average, and then further back to that downward, the downside of this Bollinger Band envelope if we lose that moving average. Now, considering the fact that we saw all of these things happening, it showed that it took a lot of strength and a lot of extension to get us out from under this downtrend. Now we needed to, again, see the indicators reset, see this reset on this Bollinger Band here, see this RSI come back to lower levels, see this daily MACD start to work back towards a neutral position before we could actually see a stronger growth back to the upside, because had we tried to continue from this point forward, we would not have had enough momentum and enough strength to do so, which likely would have led to the larger correction to the downside and some more type of long-term macro dead cat bounce. Okay, so that's why it was so important that we did come back towards these levels. Of course, all of us wanted to see the price just take off, but realistically, if we're going to see long-term continuation of growth, we do need to see the reset on these indicators here. So now at this point, we can see that we are at this key level of support that is the minimum level of support which must hold. This is the level that dictates whether or not we retrace back towards these lower 33,000, even as low as $30,000 levels, or if we are going to establish the higher low and continue to the upside. The reason why is that the 0.618 and the 0.786 typically will either act as a barrier or a door. Okay, it'll act as a barrier in the sense that if we bounce off of it and start to set some new, local higher highs, maybe back above, $40,000 or so, it does seem as if we will have seen that support establishment accepted, and then we will continue to the top side. And with this being such a strong level of support, it does have tendencies to bounce us back up past our most macro recent high, but it can act like a door in the sense that if we fall through this level, there is a very, very high likelihood that we will resort back to the low in which we put in before it, which again does look like $33,000, or possibly fall through that back towards $30,000 as we possibly come retest this range here. Okay, now you can see that this has already been factored into the market. Even even whenever we were seeing the prices at these higher levels, people were expecting a fall towards this $37,000, $36,000, and even $35,000 level. If we do go ahead and we just look at bookmap, for example, of course, I do use bookmap whenever I'm looking for liquidity and when I'm trying to gauge the volume. We can see here that this is where the majority of our liquidity is. If we just zoom out for a second here, where's the majority of our liquidity sitting? We can see some liquidity sitting at 37, we can see some at 36, but we have 177 Bitcoins sitting in the order book towards $3,500, which says that that is where the liquidity is. And where the liquidity is, that's typically where you will see the market start to work its way down to, right? You will usually start to see the price kind of get pulled like a magnet towards wherever that liquidity is. Now, of course, we do have some of these lower levels, or these higher levels. We have this 38 level showing some signs of liquidity. We did just get a strong buyer here at 39,500, which says that people could be expecting a more short-term push back up towards the $39,000 level, which would be, of course, great for us, especially considering the fact that we have just recently bounced off of this key level of support. But realistically, there is still a strong chance that unless we start to really establish some support on the levels in which we've just recently hit, we could still see that push back towards this $35,000 level and start to fill some of these orders and really see this liquidity enact, which could see us push towards the bottom side of this key support level. But I am expecting with the strong levels of buy orders in which we are seeing down there, strong liquidity, we are seeing the buyers step in, as you can see by these green volume dots. We can see buyers stepping in towards some of these lower levels. I do think there is a very strong chance that support establishment will happen here and that we can see some growth. But do understand that the loss of $35,459 towards $35,000 will very, very likely result in a collapse towards the downside. So it is a very, very important and crucial moment. That's why I labeled this video the moment of truth, because I can't tell you what's going to happen. I can't tell you this or that, but I can tell you what's the important levels to watch out for and how you can identify whenever a very, very substantial move has happened, which is exactly what we did into today's video. Okay, so what I would just say about this one is to not be doing much. That's what I'm doing. I'm not doing much at all. I am expecting that we will see a loads of volume step in and buyers step in towards these lower levels as we have seen, but I definitely would want to see a push back up towards and above $40,000 before saying that support establishment could have even been successful. Realistically, it would need to bounce all the way back above this $44,000 to $45,000 range before I'm really excited, because of course now we do have this 50 moving average sitting back above us and all of that good stuff. So realistically, until we really start to see a stronger bounce back up towards $41,000, I will say that I am not doing anything, because there is still this key level of support that if we lose will result in a loss of probably up to somewhere 15 to even 20%. And so as long as we are still even around this key level of support, I'm just going to kind of hold back, pay attention to what happens, engage the markets. Of course, do pay attention to your geopolitical events, as they are causing a lot of stress on the markets here. But of course, as those things do ease up, the technical analysis will really start to pay off, as it does show us our confirmations, not only to the upside, but to the downside. Okay, so with that being said, that is going to be about it for today's video. That is the moment of truth for crypto. This is what we need to be paying attention to, and this is going to really determine, okay, are we really confirming this bullish reversal, or do we come back down to retest this range low here and really figure out where is this market going? So with that being said, of course, I will continue to update you all as this thing does play out and as we do get updates. And of course, if you do want to stay as up to date as possible, the best thing you can do, turn on notifications so you never miss a video, and I will see you all next time. Peace.